Today's topic is the tax benefits for adoption, covering both the adoption credit and the employer adoption assistance exclusion, as detailed on Form 8839. For 2025, the maximum credit is $16,810 per eligible child. An eligible child is one under 18 or physically or mentally incapable of self-care. It's crucial to remember this is a per-child, not a per-year limit. A taxpayer can receive adoption assistance from their employer, which can be excluded from their income up to that same $16,810 limit. The exam will test your understanding that a taxpayer cannot claim both the credit and the exclusion for the exact same expenses. This is a classic no double-dipping rule. Qualified expenses include reasonable adoption fees, court costs, attorney fees, and travel expenses. The exam loves to test what is not a qualified expense. Remember, costs for a surrogate parenting arrangement are not eligible, and most importantly, you cannot claim the credit for adopting your spouse's child. This is a very common trick question. The timing of when you claim the credit is one of the most difficult and heavily tested concepts. It depends entirely on whether the adoption is domestic or international. For a domestic adoption, expenses paid in any year before the adoption becomes final are claimed in the year after the expense was paid. If you pay expenses in the same year the adoption is finalized, you claim them in that year. For international adoptions, the rule is simpler but stricter. You must wait until the adoption is final. Only then can you claim all eligible expenses paid before and during that year. Here is a critical exam point: the special needs adoption rule. If a taxpayer finalizes a domestic adoption of a U.S. child that a state has determined has special needs, the taxpayer is treated as having paid the maximum amount of expenses, $16,810. This means they can claim the full credit amount upon finalization, regardless of whether their actual expenses were lower or even zero. This rule does not apply to international adoptions. The adoption credit is nonrefundable, meaning it can reduce a taxpayer's liability to zero, but they won't get any of it back as a refund beyond that. However, any unused credit is not lost. It can be carried forward for up to 5 years. The exam will test this 5-year carry-forward period. The credit is also subject to a modified adjusted gross income or MAGI phase-out. For 2025, this phase-out begins for taxpayers with a MAGI over approximately $252,000, and the credit is completely eliminated for those with a MAGI over about $292,000. While you may not need to memorize the exact numbers, you must know that a phase-out exists and can eliminate the credit for high-income taxpayers. To help remember the timing rules, use this phrase: for international, wait for it to be final. For domestic, you can pay now and claim it next. And for special needs, just remember, special needs gets the max. Knowing these distinctions is key to correctly answering exam questions on adoption benefits.